Hi there, everybody. It's Ifti from Extreme Returns, and thank you for joining me. I'm making a load of videos on many different companies. This is Tesla, one that you've been waiting for. So we're going to look at in-depth financial analysis on how good a company Tesla is. I'm a qualified accountant. I qualified back in 1995, and I've set up a number of successful businesses nowhere near the level of these companies, but in my own right, I'm an entrepreneur. Now, I have joined Etoro and I'm trading under the name of Extreme Returns. Tesla, as you can see, is one of my holdings. I've got just under 4% of it. I'm a long-term believer in it. So let's look at the financials. It's just under 500 billion market cap. Now, a chap called Michael Burry, who was in The Big Short, famous investment fund manager, he decided to short Tesla. And what that means is that he's betting that the share price will go down. The reason he's doing that is because he thinks it's way overvalued. In fact, if you add up, I think it's the top 30 companies. If you add up the entire automotive industry, all the major players, Tesla is by far the biggest, and it's about 2/3 of the entire automotive industry market cap worldwide, which is amazing. Let's look at the quality. So from a financial point of view, we're looking at different metrics. Return on capital employed, which just means that it's a measure of how well the company is investing its money. It's 5.5%, which normally wouldn't be fantastic. We've seen other companies, especially Microsoft, Apple, and all those kind of big tech companies doing much, much better. But Tesla is different. It's in a very capital intensive industry. Amazon is at 11% capital return on capital employed. So green here means it's good. The fact it's returning 5.5% margins and return on capital. Operating margin is simply the level of profit it's making after its direct costs. So looking at the revenue, it has been growing exponentially. Look at that graph. It was $3.2 billion back in 2014. Then it went up to 4, 7, 11, 21. So it's nearly doubling every year. In 2019, the rate of growth had to stall. You just can't double every year on revenue and keep it up forever. So it went up to 24.5 billion. The 12-month trailing basis is 28 million. So American companies have to give quarterly earnings updates, take the last 12 months of earnings, and you're at 28.1 billion. They're also giving an estimate for the full year of 30.9 billion. And next year, they say they're going to grow at 50%, which is amazing. It's much faster than, say, for example, between 2018 and 2019. Compound annual growth rate at 50%. This is the highest we've seen in any company that we've analyzed. That is amazing. So looking at net profit, it was losing 300 million, 800, just under $1 billion there, cut it costs, but then went up again to nearly a -2 billion figure, -1 billion, -862, became profitable in the last 12 months and very profitable in the full year earnings estimates to 2.3 billion. So it is making money. However, most of that money is coming from credits, which it's selling to other auto manufacturers because it's so far ahead in terms of the electric vehicle space that the other companies are buying credits from Tesla, and that they have to do by law. Next year, they are going to be making 4 billion. So you can see why the share price has been going up. It's because they're going to be making a ton of money. And to be making $4 billion worth of profit for a car manufacturer is brilliant. Say, just as an example, let's just take one of the big American ones like Ford. Now, Ford, you can see here, their return on capital employed is actually minus. So you give them 100, they give you 98.5 back. And the operating margin is, so they're making losses. And their profits, I suppose here, net profit for Ford, 7.3 billion, 4.5, 7. So they were very profitable. Last couple of years trailed off. So Tesla, by making 4 billion, isn't going to be the most profitable car company ever. However, I think that's going to keep on growing up and up and up. Now, let's look at how much cash they're sitting on, 14.5 billion. So if they're profitable, they don't need to use up cash for their ongoing operations, but they might need it for expansion. They've raised a huge amount of money. Just sitting on a cash pile always helps, especially during these uncertain times. Value is 2, which is really, really bad. What does that mean? So look at the metrics. PE ratio is 182. It was much higher. But this is by far the highest I've seen in any of the top companies. PE ratio means price earnings ratio. It's how expensive a stock is. So take Apple, for example, it's about 30. Microsoft is about that as well. Amazon is 71. PE ratio for Tesla is more than double that. That's 182. It's not going to be giving a dividend. Can't blame them for that. Share price pre-pandemic, so let's look at February time, was around 155. It's now 695. It dipped to 85 and it's just been going on an incredible run. I mean, it's had a few dips, but it's just been growing and growing. But let me show you this chart. I love looking at it from inception, which is 2010 here. For years and years and years, 1 year, 2 years, 3 years, 4 years, 5 years, 6 years, 7, 8, for 9 years, it didn't really do much. It's only here in December 2019, in the last 12 months, has it really shot up. So if you look at that 70 this time last year to nearly 700. So anybody who bought this stock 1 year ago should be rich. Okay, momentum. What does that mean? How fast is the share price growing? How much momentum has it got? It's outperforming the marketplace on a 1 month, 3 months, 6 months, and obviously a 1 year basis. It's at an all-time high at the moment. Moving averages means taking the last 50 days or 200 days and what's the average share price? How's it doing today? So it's well above its averages for the last 50 days and 200 days as well. So what else is there in here which might be of interest? Well, let's have a look. How much of this company does Elon Musk own? There we go. Elon R. Musk, individual investor, just under 18%. So if you take 18% of nearly 500 billion, you're looking at nearly 100 billion, between 90 and 100 billion, just in his share worth in Tesla. Others, this is interesting. Bailey Gifford, they've been one of the big supporters of Tesla for many, many years. Scottish fund manager. The rest of them will be picking up shares because Tesla is now part of the S&P 500. And it's part of the S&P 500 now because it's making profits. Before they weren't allowed, although easily they could have been even as far back as January, I'd say they'd be eligible in terms of market cap. So that's Tesla. Now, as I said, I'm Ifti from Extreme Returns. I'm holding Tesla as a long-term position because I think it will just go up and up and up. I have cashed out a little bit, but I'll keep on buying on the dips. I hope this was useful. Thank you, everyone, for participating. Do leave your comments below, subscribe, like, share, and join me. Thanks a lot.